So now, taking that a step further about the movement, we've talked about now the dollar index related to euro pairs. You should also understand that if the dollar index is rising, it's going to push USD base pairs higher. What that would be USD CAD, USD CHF pairs where USD, US dollar, is the first pair of the currency pair. So you can flip that and think that if DXY is rising, it's also going to then pull US dollar quote pairs lower. So it'll push USD base pairs higher and USD quote pairs lower. So Euro USD, GBP USD, XAU USD, any of those USD pairs on the back end, as I like to refer to it, that's going to get pushed lower as DXY is rising because the USD is on the back end. Makes sense. So here we can just look at a few charts. You see the almost exact inverse correlation between the DXY, the black line, and Euro USD. As Euro USD was falling here back in 2015, dollar index was rising. Almost identical here. We're looking at a weekly time frame just because I wanted to show you it over multiple years. You can see it's almost exact. Here, 2019, the value of the dollar has been going higher. The value of the euro to the dollar has been going lower. So you can see that correlation here. Also looking at GBP USD. Now, this is important to note. It's similar to Euro USD, but not identical. Each pair is going to be correlated a little bit differently to the dollar index. The closest correlation, though, is going to be in Euro USD. You can also look at gold because people talk about gold all the time and try to compare the value of the dollar to gold. In my opinion, when you look at charts like this and you look at it over a long period of time, it's very hard to find a pattern to say what would drive the dollar up would then drive gold up or down. Gold kind of moves on its own, and that has other factors into it. We're talking about, other countries even playing a factor on the value of gold, where the dollar index is just an indicator of our currency versus the other 6 in that basket. So now, to take that a step further, using the dollar index to trade other currency pairs is very simple. Like I said already in the video, if you're trading, for example, Euro USD, if you see the dollar index rising, even on the 15-minute time frame, if you see the dollar index rising, or let's even make it more specific today, you see this huge news pin here, 9:30, going into that 10 a.m. dollar news. We know that the dollar news can impact Euro USD. So what we can do is look at the dollar and look at the euro to the dollar and say, what is this market more likely than not going to do? What I first would do is add in some EMAs so I can identify my trend. Here, we were in a downtrend now, we can see overnight, and then found consolidation through the London session into the New York session prior to that news. And what that basically tells me is that because news was coming, we knew that price was going to consolidate, and it does, right between that low set here, right at the end of the Asian session, to the high set here at the start of the London session, and it just chops in between. Knowing news is coming, we would wait. You would never want to trade into high impact news. We talk about that all the time. But we would wait to see, okay, I'm looking to trade Euro USD. I'm going to see how does the dollar index react to the news. Okay, dollar index was reacting negatively, coming lower. That means Euro USD is probably going to move higher. And that's exactly what it does. And now I bet if you watch this progress as the day goes on, more likely than not, it continues higher without retesting this zone that it was chopping between earlier this morning. Because what it did was it said news is coming, let's collect our orders, and once news is done, however the dollar is going to move on that, it's going to move Euro USD opposite. So because the news was negative and it pulls the dollar index down, Euro USD goes higher. You can even, if we want to be really advanced, take this a step further and use a TDI to help identify divergence so you can think 3 steps ahead. And I know this is a lot, but if you can do this, you can say, look, news is coming, I can see divergence, right? I can see where this market could be setting up. I could see where this market could be setting up for some rise, and now all I need to do is wait to see if the dollar index reacts to the news, and if it does, that will tell me how to trade a pair like Euro USD. The final question I know a lot of you guys will probably have for me is, well, Austin, how do I use the dollar index to trade something like GBP NZD? The way that I would explain it to you is this. Because neither of these pairs are correlated to the US dollar, neither of them, it's GBP and NZD, I wouldn't rely on the dollar index too heavily for my analysis here. And I know that's not what a lot of people will tell you. They'll say you can still use the dollar index because it drives the currency markets. I'll disagree with that. I'll respectfully disagree with that. I'll say if it doesn't